This accounting mini lecture summarizes the direct and indirect methods for preparing the statement of cash flows. When preparing the statement of cash flows, we have two basic options. We have the direct method and the indirect method. Now, it's very interesting to note that the FASB has indicated a preference for the direct method of preparation. However, approximately 99% of publicly traded companies use the indirect method. So this is one of the rare situations where the vast majority of companies actually use a method that's different from the one noted as preferable by the FASB, okay? So we're going to look here at the basic differences. Now, it's important to note that the only difference we're going to see in these two methods occurs in the operating section. The financing activities and the investing activities will look exactly the same under both methods of preparation. It will not vary at all. The only thing that's going to look different is the operating activities. Now, when we're using the direct method, and we see this example here at the top, when we're using the direct method, we are basically going to detail all of our cash receipts and all of our cash payments to show the net cash that was provided by operating activities. In contrast, when we use the indirect method, we are going to start with net income, and that is the net income pulled directly from our income statement. We are going to then reconcile back to the net cash provided by operating activities. We're going to do that by taking net income. We're going to adjust it for any non-cash expenses that might have been paid. We may at times also have to adjust based on gains and losses that were reported related to investing activities, such as gains and losses on the sale of investments or the sale of property and equipment. And then we're also going to adjust for the changes in our current asset and current liability accounts. And we can determine those changes by looking at our comparative balance sheets. And basically what this does is it provides a reconciliation to our financial statement readers that shows us the difference between net income and the cash that was actually generated from those operating activities. Thank you for watching this video summarizing the direct and indirect methods of preparing the statement of cash flows.